Hey Moneymakers, it's Joshua Bellinger, and in today's Follow the Money, we're going to talk about two things. One of those things we're going to talk about is how to cash in a 400% gain on Dell, which we talked about 2 days ago. I'm also going to show you the newest opportunity and why it's probably not only because the undermarket activity is going to go higher, but why it's the overall theme of what's this asset is going to go higher. So first, let's take a look at Dell. Just as we talked about a few days ago, we were looking in that August contract. We had seen some undermarket activity where people were positioning for prices to go higher. Well, if you look at the bid ask up there, the market closed at $49 today. Well, right now after hours, it is trading up to $58. It's a little bit shy of 58 right now. But what we're seeing is about a 10% move. It's going to gap up higher tomorrow, and that, boom, bang, is where those profits are going to come in. So those options that we talked about, $1.80 that were being bought, and we're saying, hey, look, we had 63 days for those to work out. Well, they only worked out in a few hours. But those contracts are probably going to trade around $9 a contract tomorrow. $9. They're buying them at $1.80, and they're going to sell them tomorrow probably at $9. Now, if you took advantage of that, you were able to get in at a better price. And if you lock in those profits, you gotta sell out tomorrow. You gotta take those 400% gains. And once you do, let us know. Write us in, write me, tweet me, let me know. Let me know when you cash out. Show me the money. I want to see that money. Now let's talk about why we don't want to hold on further. You could look to sell some of that position and let some of it ride. Again, we have 63 days for it to, or now it's 59 days for it to pan out. But what I would say is let's take some off the table. For me, I probably would take it off the table. I would also look to manage it some other ways. One of the ways you could do is sell a call against it. But those are some more sophisticated ways if you want to either take that money and run or you want to let it play out a little bit more. But again, here's a under market activity we talked about. And this is why it's important. We are trying to find those needles in the haystack, and this is one of those. There's a lot of opportunities in the financial markets, but we want to only be part of the ones that are ready to move. So the one that we're looking at today that we're going to talk about and bring it up here on the chart is GLD. Now, I'm not too crazy about ETFs. We don't typically look at ETFs because each ETF is not made the same, but gold, the GLD, is an easier way to trade gold without having to take the physical. One of the things that's going on with gold right now is gold is leading the miners. And it's a really interesting theme. We have a couple different themes going along. One of the themes is that the money press is burning and running 24 hours a day. Central banks are just printing money, and that's going to create inflation. The best way to hedge inflation would be through a physical asset such as gold. So gold has been creeping up. And we haven't seen gold make that kind of a shake and bake move yet. It's been creeping up higher, but it hasn't really made that explosive move that a lot of gold bugs are looking for. And right now it could be where we're setting up for that. So the overall theme here is we're at 52-week highs. We're at new highs right now. Are we going to see that explosive move? I don't know. But I do think, and what we're seeing is that we're going to see a summer grind higher at least. So let's take a look here at the options market in the GLD. Now I just want to take you over. Now, see, this is the reason why you need a system, because we are going through all these options here. And I mean, how would you know what's going on and where? And that's why you need an eye. You need an eye in the sky. That's the beautiful thing about our algorithm. That's the eye in the sky, and we're able to see exactly that moment someone's putting on a trade and be able to follow in behind them, just like Dell. So what we're looking at here is we're going to go to August here. There's a lot of contracts traded, but the one that stands out is the 166 strike here. So it's the August monthly expiration that expires in 59 days. Again, 59 days. But this one, this is the 166 strike in the GLD. And they were coming in here and they're buying it about $5 in, I think it was about $5.20, $5.30 they were buying. So 5,000 contracts traded, an open interest of 1,967. What that tells us is that volume is greater than open interest. And we know by National Best Bid and Best Offer that a big block of these were bought, and they were bought on the offer. Well, they were bought. We know they were bought in their new positions, not closing positions. So what we're taking here and why this is interesting is because that's about a $2.5 million in premium. Now, it may not sound a lot in the whole scheme of things. Sure, $2.5 million, that's a lot of money to me. and it's a lot of money to you probably as well, to a fund, that is a lot of money. And it's not it's a normal size bet for a institution, a savvy investor, somebody to put on there. So when we see these types of bets placed, they're interesting because it's not as if this person's putting on $2.5 million and they're like, hey, look, when prices get here, I'm stopping out. That's not how they position. When they put money down, they're looking to make a lot of money on it. And if they don't make that money, then they're willing to lose that whole premium placed. So it's $2.5 million or bust. But when we see gold moving up higher and we think about the themes that we're seeing here, inflation, there's the delivery of gold has been difficult as well, getting gold. So getting delivery of physical gold has been very tough recently, getting and locating it, which is moving that asset up higher. So if you have to deliver physical gold and you don't have it, well, you have to go find it. So that is the other issue going on with the gold theme as well, where people are wanting to take actual physical delivery, and the people that are on the other side of it don't have it, so they have to locate it. So that's where you're getting prices moving up higher as well. And that's where you possibly, if a lot of people want that physical demand and physical delivery, that's where we could see prices shoot up. So looking at this, they're looking right now with prices at 166, this is an at the money bet. 59 days at the money, they're saying, hey, look, we think this is going to go higher. So what I'm looking at is that, hey, look, we probably in the next 59 days will shoot higher. And that $5 bet, that $5 contract that they're buying probably goes to $10 to $15 in the next 59 days. It's a big premium, $530 per contract. But again, when they put $2.5 million down, that's what I want to know. And when you look at the overall trend in the marketplace, we start to hear about the second wave and all these other issues, and even companies, small businesses going out of business, inflation, costs are going up higher. The only way to hedge that is through gold. So that's the play for today. And make sure, if you haven't, join the club. You want to join the club, get on some new opportunities like this. Take the money that you just made on Dell, join today before the club closes. Take care, and we'll talk to you in a few days.